So as we look at the economy, as we enter into the fourth quarter of 2018, in the United States, it's all good news, which is interesting as we look at an 800-point down market followed by a 500 down market, and people start to question the economy. Remember, the price of the market doesn't always apply to what's happening in the economy. As a matter of fact, we think a lot of this is driven by algorithmic trading, a topic that we brought up in a white paper just a couple quarters ago. So the market's going to react. We think the market's reacting to interest rates and pricing. And the irony here is it's the good economy, it's the strong economy that's creating an upward movement in interest rates that's starting to create some of this volatility. So as we look at this first chart on the economy, we'll see GDP continues to grow. In fact, we saw 4% GDP growth in the last quarter, last reported quarter, and we're still following through with 3+% GDP growth. The U.S. is growing, it's expanding. We're actually also starting to see the U.S. maintain a strength in its economy and start to diverge away from the rest of the world. In this next chart, we'll see Europe and Japan's GDP growth is very good. It's in the mid-twos. They're still growing, but not nearly as strong as the United States. So while the United States has continued to go higher, their growth has pulled back while they're still growing, just not as strong as it was earlier. So this divergence is coming from an awful lot of confidence here in the United States. So whether it's a tax deduction through the new tax cuts or repatriation of dollars or just a strong economy feeding on itself, confidence is rising. In the first chart, we see that consumer confidence continues to move higher. And what we know is that as consumer confidence builds, personal spending builds, and the economy just starts to continue to gain strength and continue to maintain a growing posture. We're also seeing small business optimism rise. That's very important. It's the largest employer in the economy. By the way, CEO confidence is also rising. So across the board, confidence is high and continuing to rise, and that's always a good sign for continued growth in the economy. I mentioned repatriation of dollars. This next chart shows that the tax cut included a one-time event for companies to bring dollars that have been stuck overseas because of onerous tax rules. Those taxes were reduced significantly, and that money is coming back. The chart shows a dramatic spike in dollars coming back to the U.S. Now, those dollars are going to go to different places, and as we hear some of the folks that were against the repatriation of dollars say it's just going to go back into shareholders' hands through stock repurchases or dividends, and that's true. Some of the money is doing that. Some of the money is paying down debt, and some of the money, as we're seeing in CapEx numbers, is starting to be spent in building back up capital expenditures and preparing this economy to continue to grow, building up manufacturing, building up facilities. So we're seeing a nice spread of these dollars across the economy. I would make one point. It's not necessarily a bad thing to put money back in shareholders' hands. That as you buy back stock, you decrease the number of shares, earnings go up, companies get stronger, you pay down debt, companies get stronger. That tends to give them more confidence. That leads to a better economy. As you give shareholders dividends, they get more cash flow, again, out into the economy. So bringing the money back and putting it in the system in whatever form is a net positive, some more than others.